What's good, everybody? It's gonna come back at you on a video. So this video I wanted to do a trade recap for April 9th. Now, of course, it's been about a week since this happened. Um, but I was not really in any rush to post the video because I ended up being stopped out at break even. Um, I didn't really take any partials because I could have taken a super tiny partial, but the main location where I was planning to take the big bulk of the partials price just barely missed hitting that target and then ended up reversing. So I got taken out at break even. So it still ended up being a risk-free trade. Didn't take a loss. But yeah, I want to go and do the breakdown for you guys to have it make sense, right? So here we have Wednesday, April 9th. So of course, we need to check the Forex Factory calendar before we do anything. So Monday and Tuesday of last week there wasn't any trades, and now Wednesday, April 9th, we had FOMC minutes at 2 p.m. So this is the afternoon. So I don't really have to worry about it. The only like if a setup presents itself during the morning, then that's great. I'll operate as normal, right? However, if let's just say I'm still holding on to the trade because I'm trying to hit deeper targets, I'll try to close the trade sooner, or like I wouldn't want to. Me first, on me as an intraday trader, I'm only trying to my trading window is from 9:30 a.m. to 11 a.m. Eastern, so that's the 1 hour 30-minute window that I'm actively looking for trades. But me being an intraday trader, I'm looking to get in and out of a trade, ideally within an hour, but typically within an hour or two. Doesn't really go past like 2 hours, so that's what I'd be looking for, right? Because I'm aware of the news in the afternoon, and then of course we have CPI and PPI. So we wouldn't trade Thursday or Friday. Wednesday was the last trading day of the week, at least for me and my strategy. So I'm gonna do the breakdown for that. So here on the daily time frame, we first want to get a bias as far as which direction we believe price is heading, right? Because if we're able to determine a higher time frame bias, then we can have an edge in the marketplace and maximize our win rate, right? Because we want to trade where all the momentum is going, right? So just ignore this entire big bullish candle, right? That's what ended up happening that day, right? Price continue to push higher. But if we ignore this big candle, as you can see here, there was a push down. Now I understand this push down aggressively cleared the low here and the low here, right? A lot of liquidity on the daily time frame, right? Especially these look like relative equal lows. So liquidity was purged. However, I don't want to just be bullish for the sake of being bullish because price can still continue traveling lower if it chooses to, right? So if we ignore this massive aggressive bullish candle, I was bearish on the day. Why? Because price aggressively pushed down. It left fair value gaps here, fair value gaps here, and you see this candle right here. This candle tapped into the fair value gap. So right now, bullish PD arrays, or yeah, essentially PDRA stands for premium discount arrays. So it's tendencies of price doing certain things, right? In this case, right, you see where my cursor is. This right here is a bearish fair value gap, and you can see here the bodies respected the fair value gap. Now, of course, you see it wicked through, but the bodies what respected the fair value gap. So I'm expecting the fair value gaps to be respected here because that's showing a shine of bearishness. Now, you can find higher time frame bias if you use like entries on the 5 minute down to the 1 minute. If you enter there, then you can use higher time frame bias on like the 1 hour, 4 hour, and the daily. Usually I like to stick with the daily, but like if there's certain moments where the daily is like a little bit ambiguous, then I'll drop down to like the 4 hour. And then if the 4 hour is unclear, then I'll drop to like the 1 hour. But the 1 hour, the 4 hour, and the daily, that's where I would try to determine my bias because that's higher time frame bias compared to where I take an entry, right? My entries from the 5 minute down to the 1 minute. So essentially what I want to do is I want to ride the momentum in whatever direction price is expected to go. Now, jumping onto the 4 minute time frame, the reason why I was also still bearish is because you can see a price came down and price was pushing up and up and up, and price came up and cleared this higher here. You can see with Tuesday, April 8th push, price came up and cleared this high and wicked it. So because it wicked it and sort of rejected it and aggressively pushed down, that is a tendency of price to be bearish where it clears previous highs like it just quickly clears it and then it continues pushing down aggressively. So as you can see here, price pushed down aggressively and it left more bearish fair value gaps. So I'm seeing a lot of bearishness, which is why I stuck with the bearish bias now. So jumping into the day, um, what we want to do is we can set the vertical line at 8:30, right? Here we have the 8:30. Now we look to the left. Where do we see, since we're bearish, where do we see um, bullish liquid? Like where do we see the most recent swing high, right? If we look to the left from 8:30, you see a swing high right here. This is the most recent swing high, so this is serviceable for liquidity. But obviously, I'm also seeing highs, right here. I'm seeing highs here, highs up here, and then of course you see a fair value gap right here that is, almost entirely clear because it's high, right? Taps into it. But that's what I'm looking at. So this high that I marked is perfectly fine because it is the most recent swing high prior to 8:30. So after 8:30, price came up and cleared it, which is okay. Why? It's okay because we are bearish in price. So we don't mind if we see price pushing up because that's what we want to see. We want to see buy side get clear. What we want to see our sell side targets remain intact, right? Because if price pushes up, like we don't know how high price wants to go, right? Like it's very well might be possible that price may just want to clear this high, or maybe price wants to go here or here, right? Or maybe up here, right? We don't actually know how high price wants to go. But if it's going up and up and up, then it's digging deeper into buy side liquidity. And as price keeps pushing higher, digging into buy side liquidity, it can potentially leave us more targets to downside, right? Like this could end up being a fair value gap that if price goes up here and then breaks structure, right? Price may end up wanting to go back to the fair value gap. So then we could have this fair value gap here serve as a target prior to taking the low here and the low here, right? So you guys understand the logic. So this is what we want to see. We want to see buy side get taken. So we mark the buy side here. And then obviously we have some targets down low. Now this target right here, this is the low of the day. And then here we have the low of London session, which London session is just this green background right here, right? So, and then also if I drop a 5 minute time frame, right, we also see fair value gap here. We see a gap here, right? But the gap down here is more prominent. So I'll mark these purple, right? Because these are like targets that I like the color. All right, I like to color code things so it makes sense, right? Here is blue. Why? Because it's buy side liquidity. So I'll just mark it for you guys here, right? Buy side liquidity. We see price taps into it at 8:55, which is fine, right? Because after 8:30, that's when the hunt begins. That's when we expect price to start um, either typically hunting for liquidity, but sometimes they can begin generating liquidity. So this right now we're formulating an idea, a thesis of a potential trade setup, right? So this is my setup for the time being right now. Of course, I want to see price keep pushing higher. Now, after 9:30 open, because 9:30 is the stock market open, right? After 9:30, because we are bearish, right? I want to see price make the high of the session, which means clearing the liquidity and then breaking down lower. So now I'm on the 5 minute time frame. Now I'm just going to continue stalking price to see where it goes, right? So this push up, that's what we actually want to see. Like that's a good thing. We want to see price push higher and higher. So now let's see the 9:30. Boom. So this bullish candle right here, this is the 9:30 open. So remember, with this strategy, I stay on the 5 minute time frame. Why? If I stay on the 5 minute time frame, I minimize the amount of noise in the marketplace as far as like because from time to time you can get like 1 minute structure breaks, and you don't want to just jump into trades, any break of structure and any gap you see in the 1 minute time frame, right? You don't want to do that. Sorry about that, the dog was barking. So the reason why you want to stay on the 5 minute time frame is because it helps reduce noise. You don't want to just stay on the 1 minute time frame and just trade any break of structure and any fair value gap tap, right? Like if price truly wants to begin moving in the direction that you anticipate, you want to see some aggressive momentum. You want to see, you know, a strong candle in that direction on the 5 minute time frame, because then that tells you, okay, now we have some momentum. Now price is showing signs that it wants to move in that direction. And like in this case, right, 9:30 came up and it clear this, right? Clear this high. That's great. But now what we want to see Now I'll mark this here. I'll put the eyeball for you guys to let you guys know that buy side liquidity was taken. So now this high was cleared. Perfect. All of my confirmations is met. But now what we want to see is an aggressive bearish candle, and we'll see if price is going to give us that. So we see here the next 5 minute candle is an aggressive push up. So this is why you want to stick on the 5 minute time frame, because then you're not super locked in, focused, and questioning yourself every single time you see a miniature break of structure, right? You want to see movement with momentum. So in this case, right, this candle up here made the new high of the session, right? It cleared liquidity, right? Clear the high here, the high here, the high here, and it's working towards the highs up here. So this is what we want to see. We want to see price continue pushing higher, and then we want to see an aggressive move lower. Boom. So now you're starting to see a candle that actually has some momentum to the downside. Now, in a perfect world, I want to see like I don't want to see uh these bearish candles with like half wick and half body. Like of course I want to see it to be like majority body, but nonetheless, this is still a strong candle in favor of our direction. And also, right, this candle here cleared all of the liquidity up here. So a lot of the buy side, if not pretty much, well, all of the buy side for the day, right, for all of Wednesday was already cleared with this move here. So now, because we have an aggressive bearish candle, now I'm going to drop down to the lower time frames to see what's going on, right? So the 4 minute time frame, there's no break of structure yet, right? The last structure point before this high right here is this swing low, which price clearly did not clear yet. So there's nothing here. 3 minute time frame, it shares the same swing low right here, but price still did not clear it. 2 minute time frame, you see here, this is the swing low prior to the break of, well, prior to this, the last up move. Price still did not clear it, so there's nothing for us to do here. Same 1 minute time frame, this is still the low. So there's nothing to trade yet. So this is what I mean. This is why you want to be patient. You want to just watch price and see how it unfolds. Because this candle here still did not give us an opportunity to trade. So then I go back to the 5 minute time frame and I wait for the next 5 minute candle. And then next 5 minute candle, guess what? It gave us a bullish move up. So there's not going to be anything. If you want to check on the lower time frames, you could take a quick peek. But that bullish candle, what did it do? It covered up a lot of the imbalances, the fair value gaps that was previously formed. So because that happened, what I'm waiting for is I'm waiting for another aggressive push higher. I want this high to be cleared and then another break of structure lower, right? Because I want it to be, once again, I wouldn't even, you can drop to lower time frame, but I wouldn't even need to do that because I know all the fair value gaps are already closed. So I need this high to be cleared, and I'll mark it for you guys here, right? So as I'm trading, I'm actively like annotating my charts because that's me putting thought or pen to paper, right? So I'm waiting for another push up for price to give us something. Boom, right? So you see an aggressive push up, great. Now from this point on, I want to see an aggressive move down. If it doesn't give me that, then another. I want to see the high clear. Boom. Now this is what we're talking about. This is what I want to see. I want to see momentum. I want to see aggressive movement, right? You see, this is majority body, and this is pretty much an engulfing candle. This candle engulfs the three previous candles as far as bodies, but clear as day, you're not gonna miss a candle like this, right? So when you see a candle like this, now you drop to lower time frames again. 4 minute time frame, what happened? Price came down, broke structure here. You guys can see this last swing low prior to the highest move. Broke structure here, no gap, so no trade on the 4 minute. On the 3 minute, price came up, broke structure on this low right here. There's no gap, nothing to do. Here you see price came up. This was the last swing low right here. Price came down and broke this level right here. Now, what I need you guys to understand, the fair value gap that we look to take a trade from has to be within the displacement range. So what is the displacement range? First of all, let me mark the low so you guys have it highlighted. So we're on the same page, right? This is the low. As you can see, the last low prior to the upwards move, price came down, aggressively broke through where you see bearish candle, bearish candle, bearish candle. And we see a clear fair value gap right here. So the displacement range is the displacement low, which I have here, and the displacement high, which is the high that was made. We drag that out. We now need to find a fair value gap that falls within this range. And as you can see, clear as day, we have a fair value gap right here. Now, what you need to understand about the fair value gaps, The fair value gap, the entire fair value gap has to fall within the displacement range, which is effectively this pink box. And the fair value gap needs to be formed with candles in the same color direction that you want to take it. So for example, because I am bearish, I want to see black candles form like appear consecutively that create the fair value gap. I don't want to see this black candle, the candle that created the gap. I don't want to see this be a black candle and the next candle be a gold candle, a bullish candle. I don't want to see that. Why? Because I want momentum to be in the same direction. So this is a legitimate fair value gap in the 2 minute time frame. Now if I go to 1 minute time frame, the reason why this fair value gap would not work is because, as you can see, this gray box here that I'm highlighting, it falls outside of the pink shaded area. So this would not count. This would not fit the qualifications of a fair value gap. It is a fair value gap, but it would not fit my qualifications, right? So pretty much you could take the entry here on the 1 minute time frame, or me, I'll just go to 2 minute time frame, right? And right, we have an aggressive 5 minute time frame. The qualification of 5 minute time frame, you see the aggressive movement lower, which it gave you that. And then here we have the fair value gap within the displacement range. So this fit all of our confirmations. So at this point, I basically set up a sell limit order. I put entry here, stop loss above the high, right? And you, now you have all these different potential targets, right? Clear as day, you will have your first target will obviously be whatever low gets formed here, right? Because price, this might be the low, or price may move down a little bit more and then, right? Price might go down and then it might go up. And so then this would be your first target. But whatever this low will be your first target, your next target will be here and then here. And then as you guys can see, right, you have the fair value gap here, the low here, and then this line right here, which is the low of the day. So you have a lot of targets now. For this day, the reason why I broke even is because I was also trying to chase risk to reward, and pretty much this low right here, as you can see, if I, you know, highlight it for you guys, this is pretty much an equal low. Like price sort of like consolidated at this level a little bit. So this is where I was looking to take the bulk of my profits pretty much, because at that point, to me, I felt that this was like a nice equal low level. So I have pretty much my first target here, which I'll close off the majority of my position, and then I would have a target here, and then down here, right, to take it all the way down to the bottom. Unfortunately, price never got to that point. So we keep fast forwarding. Here we have on the 2 minute time frame. So the funny part is, as you can see, clear as day right here. Well, probably might be a little harder to see, but price did not tap me in. Sorry, price did not tap me in on TradingView on this broker. However, on my trading platform, I was tapped in, right? Because it's super close. It's hard to see, right? But price technically didn't tap into fair value gap here, but on my broker, it tapped me in. And that's because, of course, there's going to be slight differences between your TradingView and your broker. So on TradingView, it didn't do it. But when I had the sell limit, it triggered me in, which I'm tapped into trade. So now, as I mentioned it, um, basically I want to take a big bulk of my profits there. So my rule of thumb is when the first swing low gets closed under, that's when I move my stop loss to break even. So technically this swing low needed to be closed under in order for me to do that. And as you can see, clear as day, well, not clear as day, but you can see price did that. But the reason why I didn't roll my stop loss to break even was because it wasn't really a convincing close, right? Like price closed just under it by like maybe a pip, right? If that. So I didn't want, like, when it comes to trading, you want to give your trade some room to breathe, right? And sometimes you might need to make adjustments on the fly, right? You want to manage your trade properly. You don't want to just get tricked in a trade and then move your stop loss to break even instantly and then get kicked out and then the move happens, right? Like you want to give your trade at least some time, some minutes, whatever, to like begin unfolding and playing out. So that's the reason why I didn't move my stop loss to break even right away, because this was it barely closed under this low. So I told myself, okay, I want to see price close under this level right here, and then once it does that, then I'll move my stop loss to break even. So as you can see, price eventually came down to my entry. So if, let's just say, hypothetically, it seems like it tapped here. So let's say hypothetically, if price um never tripped me in, right? Then this move up here could have potentially tripped me in, and then at that point, this would be my low that I'm waiting for price to close under. So you can see price is still just hanging around. Um, and then boom, right? So then this candle right here, this is when I rolled my stop loss to break even. Um, Normally I try to be a little more aggressive when it comes to taking partials, but I just wasn't with this trade, and it kind of led to me not really walking away with anything, right? Because I could have taken a partial at this low. It's still a 1 to 115, so still over 1 to 1 risk reward. I didn't take partials here, and I wasn't taking any partials down here. I had my mind made up that I wanted to take it at this low, but then as you can imagine, price came super low, super close to it, but never actually touches the level. And then you can see price eventually, it consolidated a little bit, sort of gave me like a little hope that it was going to eventually do that. But then price came and then tapped me back at break even. And glad I put my position at break even risk free, because price eventually, like, you know, went up and would have taken me out for a loss. So this was one of these break even trades that I didn't really walk away with anything, because I didn't take partials, and this was going to be, the first target, or the main target was going to be a 1 to 2, and price just barely missed it. So it was just unfortunate, I guess you could say. Um, and so this, but it still ended up working out in my favor, in the sense that after this trading day, I adjusted my strategy, and now I'm essentially going for 1 to 1.5 risk to rewards, just straight, because I noticed that, of course I can take partials along the way and do all that good stuff, but I also noticed that some of the losses that I took was because I didn't take partials, right? Or sometimes I, some instances where I didn't take partial, like I just was getting greedy, like I wanted to cast a full move and it didn't happen, or other instances where I took a small partial, but I was trying to cast the entire move and then it never happened. So I noticed that there's a lot of course, successful traders in this industry who are doing very well for themselves, literally just scalping and just getting the small moves. Because at the end of the day, if you continue getting your slice of the pie over and over and over in this market, then your account will eventually compound, assuming you're trading percentages, right, and not just like raw values. If you have a high win rate, and at least with me, I don't trade often, so I feel comfortable risking a greater percentage, right? If I just had a 1 to 1.5 risk to reward, right? Say for example, a 1 to 1.5 was right here, right? In a case like this, my target would have been hit. And this works out because a lot of times there's trades that I want to try to take to a 1 to 2, and it doesn't always get there. And a 1.5 is sort of like a nice middle ground, because I know that a lot of these trades, because I've been following this pair for literally years, like the S&P and the Nasdaq. I've been watching it unfold. So like I've seen setups, and I know that it is very achievable to get a 1 to 1.5 risk reward. And so my strategy, and I'm gonna do also a trade breakdown for the trading day that happened today, April 15th, right? Where it did lead to a win, because I decided to not be greedy anymore and just go for this risk reward. So what I'm going to do moving forward is I'm going to aim for a 1 to 1.5 risk reward. Now, there's going to be some people who say, oh, well, Joel, you know, there's going to be days where there's going to be like a really big move and you're not going to be able to catch it. Well, I can also adapt it as well, because right now I'm still trading with a small account balance. So, like, I'm trading with like micro, like mini lots, right? Like super small positions. And so, if I'm able to just take full target to 1 to 1.5 risk reward, then it's a very achievable target, and then my account will begin to compound. So then, eventually, when I have a larger capital, I can then Instead of just taking full target to 1 to 1.5, I can close off 90% of my position at 1.5 and then leave a small runner to like the final target here if I want to, right? But just the way I am as an intraday trader, I don't really like holding on to positions, right? Like I want to have the peace of mind knowing that I got in for a trade and I got out, right? Because I don't want to hold for overnight or days after days because, sometimes there's news events that I don't want to be a part of, right? In this case, right, this was the 2 o'clock. This wasn't even 2 o'clock. Wow. But look at this aggressive move up, right? Like this happens because it's like the afternoon session. And I don't want to be part of or having to deal with any of that stuff, right? I'd rather just have a system in place where I can entirely eliminate greed and just take the trade, and then whatever I walk away with is what I walk away with, right? So having a strategy like this, it's either I'm taking a loss of a one risk reward loss, or I'm winning a 1.5 risk reward trade, or it's break even. And the good part about the way this strategy is that like had I applied this system of a 1 to 1.5 risk reward, it would have increased my win rate by a lot. And I still have a very high, strong win rate, right? As is, right? Definitely doing much better than I used to as a trader. So if I had this system in place, some of those days where I took losses or that it just ended up being break even would have resulted in wins. And those additional wins would have been additional, like my account would have been further down the line because it would have been compounding. So I'm just going to approach it like this. This helps eliminate greed. And what I'm do, I'll roll my stop loss. So if I were to take this trade again, of course, the moment price came down here, well, I mean, it would have taken me out for a final target immediately. But if let's say this candle came here and closed, I would have rolled my stop loss to break even under this level here, and then price would have hit my target. So I'm still gonna follow my rules for rolling my stop loss to break even, but I'm just going to have that final target 1 to 1.5. That's it. If there's ever a setup that presents itself where like the final target is a 1 to 1 or something, then I'll take it to 1 to 1. But if there's room to potentially get more than a 1 to 1.5, I'll keep it at a 1.5 risk to reward, right? Just to eliminate greed, and I'll just take it full target. That's it, because it's a very achievable target that's low hanging fruit, and I would much rather walk away with profit and just allow compounding to do the rest and have a strong win rate, like I'm talking about, like a 90% win rate, than to just risk taking losses because I'm greedy, right? Like there's always gonna be another setup, right? And over time, my account, if I continue winning, my account is going to compound. So that's the heavy work is already being done. So I just need to make sure I keep making the right decisions over time, and the rest is going to play itself out. So this ended up being a break even with nothing, right? Because I was had alert set and I was waiting for a price to come tap this level to close the big bulk of my position. It never did, so I pretty much was risk free, but I walked away with nothing. And had I, you know, had the 1.5 risk reward rule already in place by then, I would have had a winner on this day too. So you live and you learn. It's okay, but you're always growing and adapting and changing until you find like a strategy that works for you. So I know for a fact if I had this system in place, I would be way further along with my account balance being much higher than it is. So blessings in disguise, right? So this was the trading day for Wednesday, April 9th. As you guys can see, um, price essentially delivered us something. So if you were either more aggressive with taking partials or had, you know, more reasonable targets, you could have walked away as a winner on this day. So that pretty much sums that up. So if you enjoyed the video, do leave a like and subscribe, as I will be posting more content very soon. So once again, guys, it's Joel, and I'm out. I'll see you guys for the next video.